To our next corporate, we have Texmaco Rail that joins us on the show. We have Mr. Indrajit Mookerjee, the Executive Director and the Vice Chairman of the company, who joins us. Good morning, sir. Thanks a lot for joining in. Well, I had a two-part question. One is on your execution. The last time you joined us, you said that you'll be working at around 600 wagons per month. You're expecting it to go to around 750 to around 800. Has that happened? So what's, how is the execution picking up? Point number one. And point number two, give us an updated order book.
Currently we have gone and touched 850 wagons. So I'm very happy to state that we have done more than what we had targeted. So I hope to sustain this manufacturing rate for the future too, because the ecosystem now is fully developed, and now it's a process of executing it through various management tools which we are using. Coming to the second question, that we have currently an order book of something like about 8,000 crores. That's the in terms of that is in terms of revenue. In terms of the wagon, we have about 15,000 wagons. To be very precise, 14,600 wagons which are in the order book right now. And as you know that more wagons are required by the industry, so we are expecting to build up our wagon order book further.
So given that order book, Mr. Mookerjee, can you tell us what your expectation can be from the top line as well as the margin for FY25? Your revenue growth in FY24 was a very solid 56%. You ended the year with the annual margin of about 7.5%. So how will these numbers look as you execute this order book in the current year?
Well, I think it's a simple case of mathematics now. So we expect, because if you really look at this year's performance, really triggered by 3 quarters. If I would say 2.5 quarters, because the first quarter was not very strong. We had various issues which we had to surmount, which we have to get over. So I think we would expect a similar kind of a steady growth to come up. One of the indicators could be the performance of the Q4. That could be something which can be taken as a guideline around which we will be moving in the future. And then, of course, we look at a longer term. This is the shorter term future.
All right. So you can keep the run rate going 30, 35, at least 50%, you think, for this year?
I think it will be very difficult. It will not be proper for me to strike a number on that, but it will be a very, very strong growth. I would reckon will be not 50%, but it would be close to that region.
All right. And margins will hold at current levels?
Margins will improve, but the EBITDA margin will improve, because if you look at the Q4 EBITDA margin, it is more than the yearly margin. So the margin will keep on increasing, because as you have also we have also published it, that our average realized prices for wagons are going up because of proper product mix. So there are two forces are acting on it. One is a number, the other is the average realized prices. And as you know that the price is very sensitive to the profitability.
Got it. All right, Mr. Mookerjee, thanks a lot for joining in and filling us in with all those details. Wishing you the best for FY25. But it's